I keep going to
9:41 now. You know, it certainly doesn't feel like April at all, but April 15th is not all that far away, believe it or not. So this morning, we're going to get some answers to some simple tax questions that might help you out.
True, we are. Our tax expert, Ron Likens, is here. He is going to put us to the test this morning. You are a tax expert. That's a very daunting task.
I'm surprised you have time to be here this morning.
I have a great staff working in the office.
Good.
So it gives me time to get out.
So how's October in your world?
Well, actually,
That's
October the
tax time.
15th is another tax filing deadline,
Yeah.
we're taking care of the procrastinators.
Okay, are we ready to roll?
We're ready.
All right,
do
so
it.
we have some true-false questions. We're going to see how we do. Ron, take it away.
Okay, question number 1, true or false? Preparing a simple tax return, the most difficult thing is the mathematics involved.
Preparing a simple tax return.
That part, yeah, probably, yeah.
I'm
I'd say
saying
that's true.
false on that. I think it's a trick question.
Sean, you are absolutely right.
Oh, it's a trick question.
Well, it's not a trick question because there really is no such thing as a simple tax return. Unless you know exactly what you're doing.
Okay.
So simple often is complex, and you'll see that.
It's not about the math.
It's not about the math, it's what goes into the return.
What you need.
The income, is it correct? Is it actually taxable income?
Okay.
The deductions, you have all your deductions?
Yeah.
Is the deduction legitimate? So
Did
you'll
you
see
get all
this.
your paperwork together to get all the right numbers?
Right, getting all the information in there and taking advantage of tax-saving opportunities, which so many people miss.
Okay.
They take the obvious, but they miss tax-saving opportunities.
There you go.
What's our next question?
Next question is, under the Affordable Health Care Act, beginning this year in 2014, individuals must have health care coverage or pay a penalty.
Oh, that's true.
That's true,
Yes.
yes.
Well,
Really?
You are the craftiest tax man I've ever met.
that is kind of a tricky question. It's false according to the IRS because they call it a joint payment in terms of Joint Responsibility Act.
Okay.
So they call it your joint responsibility.
This is why you need a professional.
I guess.
But I call it a penalty because in 2014, if you don't have health insurance, you can pay up to $95 per individual for the penalty, up to $385 for a family as penalty.
Okay.
And next year, it jumps up tremendously
Is that the
to hundreds of dollars, right?
Okay.
Yeah.
Percentage of your income.
Yeah, 2%.
Okay.
Let's do another question.
All righty.
Okay, another question. A gift of $5,000 from your parents to you is income on your 1040 tax return.
That's false.
True.
Sean,
Gift
again,
tax.
you're going to have to come to work for me, Sean.
Wow.
That is false. A lot of people don't realize that's a very common mistake. If you receive a gift, it's non-taxable to you. By the same token, people who make the gift want to often know, is that tax deductible for me? And the answer is no, but it's tax-free to the person receiving
To the
it.
recipient. Okay.
Yes.
Is that up to a certain limit?
Actually, you can give up to, it's a good question, Marshall. You can give up to $13,000 per year without filing a gift tax return or owing any gift taxes.
Okay.
Again, it's on the donor. But if he
So
or
one
she...
time.
Right. Well, actually, it's $13,000 per year.
Per year. Okay.
Per year, right.
Okay.
And if you go above that, it starts eating to a tax gift exclusion, but it's not taxable.
Okay. I like it.
One
Let's
more.
Go down to your bet. I guess you had a big one at the end. That's our slam dunk question, right?
Oh, which is really the most important question.
Good. Okay. We're ready.
Okay. If you failed, you've already filed your tax return, haven't you, Marshall?
Well, it went to the accountant last night.
Oh, okay. So it's on its way. If you failed to fund a deductible IRA for the year by December the 31st, 2014, so you could deduct an IRA, but you failed to do so.
Okay.
Can you still do so by April the 15th of 2015 and still deduct it on your tax return?
Yes.
Yes.
All right.
Yes.
Yay!
That's fantastic.
Yes.
That is an opportunity that most people miss.
They forget.
They forget, and they don't know that they can actually deduct up to $5,500 per individual. So
That's huge.
yeah,
That is.
it's $11,000 for a couple.
Uh-huh.
Plus, if the couple, either one or both, are 50 or older, they can do another $1,000 each, which then would be $13,000. So it's a
Nice.
whopping deduction
Yeah, it is.
that we all complain about paying too much taxes, but we often overlook opportunities that's available to us.
There
If
you
you
go.
can pull $13,000 off your taxes.
Hello.
Well, we'll take that.
There you go.
Absolutely.
That's worth getting married, I'll tell you. What are you doing later, Tiger? Thank you so much.
Okay, Sean, thank you.
It was very
Marshall,
fun.
thank you.
Thank you.
Thank you very much.
Okay, coming up next, we're going extreme.
Dana is going to continue his extreme challenge. He's at laser tag earlier, then doing the jousting thing. We don't even know what's coming next.
Right.
We're going to find out when we come back.